A very basic and important thing in stock investing is to know the general direction of the market, which means what the overall market is currently doing. Knowing the big trend of the market allows us to develop subsequent investment strategies. When the general market is going up, entering long positions is the preferable strategy. On the other hand, when general market is going down, we should consider more trades on the short side. After all, it is far easier to make money by going with the trend than against it. There are three kinds of market in general: uptrend, downtrend, and no trend. Most of the time it is not hard to tell the current market trend. One classic way is to compare the moving averages on widely used market indexes, such as the S&P 500 index. Traditionally, the market is considered bullish when the 50-day moving average is above the 200-day moving average, and is bearish when the 50-day moving average is below the 200-day moving average. This has been proven to be a reliable guideline, but it is not usually practical to use for trading because of the slowness. By the time a trend is identified this way, large amount of the profit may already be gone. By backtesting on large amount of historical data, Bull Laboratories has found a more consistent and effective way for identifying the trend, which is based on pivot points. A pivot point is simply the local high or low point on a chart. A pivot point that is higher than its neighbor points is called a peak, and it is called a trough if it is lower than its neighbor points. Generally speaking, it takes 4 pivot points to identify the trend. When a security is having a higher peak than a previous peak and also a higher trough than a previous trough, the pricing is moving in an uptrend. On the other hand, if it is making a lower high and a lower low, then it is moving in a downtrend. For other cases, including a higher high paired with a lower low or a higher low paired with a lower high, the price movement is having no trend. In some cases, a trend can even be determined using fewer than 4 pivot points. Take the latest S&P 500 daily chart for example. On September 14 of 2023, a new lower peak was formed after a previous peak from September 1. There is a trough on September 7 with the price at 4,451.14. When the price closed below the previous trough at the end of day of September 19, we knew right away a downtrend is formed because regardless of where the next trough is at, it will always be lower than the previous trough from September 7. At that day, the S&P 500 index closed at 4,443.95, which gave us plenty of time to exit our long positions. The typical number of days for 4 pivot points to form on a market index are between 15 to 25 days. This makes pivotal point trends be identified earlier than by using moving averages. To check for pivotal points trend on indexes and stocks, you can use Bull Laboratories Technical Analysis app. In addition to showing pivot points on the chart, it gives the wordings of the analysis as well. Other than pivotal points analysis, it also includes sections like finding support and resistance levels, volume momentum and price strength summary, accumulation and distribution conditions, as well as the interpretation of many traditional technical indicators such as RSI, MACD, ADX, Bollinger Bands, etc. Bull Labs Technical Analysis mobile app can be found on iOS Store, Google Play Store and Amazon App Store. For more information and other stock trading related software by Bull Labs, please visit bulllabs.com website at bulllabs.com.